Hello guys, welcome back to my YouTube channel, and in this video we're going to continue with our beginner series. And from this part of the series we're going to be talking about strategy and market executions, all the things that you should know, all the things that you should, the basics that you should have covered before going into the market. So without further ado, let's get straight into the charts. Well, before we start talking about strategy and start diving into strategy, there's one very important topic that we are going to cover right now, and that is the topic of structure. Okay, I know I spoke about structure in the earlier recordings, in the earlier teachings, but I didn't really go in depth into it. So we're really going to dive into structure in this part of the series, because everything I do in the market is based off structure. I identify trend of structure, I take positions based off structure. Everything basically that I do in the market is based off structure. And if you're able to know how to look at structure the right way, know how to identify structure the right way, you're going to have a seamless time, marking up your charts and making execution of the charts. So let me break down what structure is. Okay, now I'll use these tools to draw them out on the screen, but later we'll go into real life charts and example, and show you what it looks like on the live screen. So let's begin. Okay, in our earlier videos we talked about trends, we talked about uptrend, downtrend, and ranging or consolidating markets. The main indication, what really tells us that this market is in an uptrend or in a downtrend or in a consolidation, or in a consolidating market, is structure. Okay, now let me just make some drawings out here on the chart, so we'll discuss more after I've done this. Okay, so based on our previous teachings, if I ask you what trend this market is going in, I'll give you 3 seconds to look at it and answer. 3, 2, 1. I'm hoping you said uptrend. If you said uptrend, you're correct. If you do not understand what I mean by this, please go back, refer to my older videos. You find my extensive teaching on this, and this would be in a downtrend. Okay, now you're going to be sorely mistaken if you think just because the market is looking like it's facing downwards, then it's a downtrend, is looking like it's facing upwards, then it's in an uptrend. That is not the way we identify trend. That is not the way we mark up we identify trends. Our trend identification is solely or majorly based off structure. Okay, now I've been talking about structure for a while now, so let's really get into what I mean by that. Okay, now when a market is making consistent higher highs and higher lows, we say it's in an uptrend. This simply means that when a market makes from a low, pushes up to a high, makes a higher low, and pushes up to a higher high, structurally this new higher low is not meant to come and take out the previous low. If this happens, then the structure of the market is in trouble. When the market is in a consistent uptrend, what you tend to see is that the new high that is forming, the new low that is forming after the previous low, is higher than the previous low. This is a low, this is a high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high, this is a higher low, this is a higher high. If you had a low, high, higher low, higher high, and we come here and this made a lower low that was lower than the previous low, this structure is in trouble. There is a high chance that the market could come, as it has pushed down and made this low, come retest here and change trend and move in the opposite direction. Now, if you watch my video on chart patterns, you'll be able to see that this with this drawing right here, if you neglect this part here, you see that this market has made a left head and a right shoulder. But that's not what we're not here to talk about. Chart patterns, we're here to talk about structure. Okay, so when we talk about structure, we are talking about the market being in consistent higher highs and higher lows. Anytime there's a violation of a low in an uptrend, the trend is in trouble. Subsequently, anytime there's a violation of a high in a downtrend, the trend is in trouble. Now let's do the same thing for this trend. This is a high, low, lower high, lower low, lower high, lower low, lower high, lower low. If you look closely, this high did not come and close above the previous high. If this had happened, this it has violated the structure, so the trend is in trouble. A market is in trend when it's making consistent higher highs and higher lows. That is the structural property of a trending market. When something else takes place, when a previous high is taken out in a downtrend, then the trend of the market is in trouble. Just have that at the back of your mind. Then we also spoke about ranging markets. Ranging market doesn't really have any, the structure is not really clean. The market is really going nowhere, so it's just moving up, down, up, down, up, down. So you can see that this market is not really giving us a good structure to trade. Okay, now that is the basis of structure. That is the basic information you need to know about structure. Now, so many people have their different ways of identifying structure. Okay, now when the market is in trend, the market makes an impulsive leg and a pullback. This is one part I didn't cover in the previous video on trend. Okay, say the market, hold on, let me go back to this drawing I made here. When the market is in this uptrend, I want you to look at these legs over here. If you look at this leg, this is what we call an impulsive leg. Why? You see how the volume that at which the market used to push up. Now look at the pullback. It's usually small. Let me change the color of this one. Let me change the color to blue. Okay, look at the pullback. Look at the impulsive leg. Turn back to ash. Look at the impulsive leg. Look at the pullback. Impulse, pullback, impulse, pullback. The pullback, this is either called a pullback, a correction, a retracement, any of the above. Many people use different terminologies, but we are talking about the same thing. When the market is trending in one direction, you find out that the impulse to that direction usually comes with volume, and the retracement or the pullback is usually, with significantly less volume than the impulse. Okay, now you can identify structure and trend on any time frame, on all time frames, and that is one of the things we're going to be covering in this video. We're going to be looking at how to identify trend, how to identify structure on all time frames, or on the different time frames that we're going to be talking about. Okay, so we're not going to be talking much about theory. I feel like when we go more into practical examples, we'll be able to understand better. So let's go into some live chats. Oh my god, see this trade I took. Now maybe I'll just go to a plain chat where I haven't marked anything. Let's go into some live chats, okay? I'll go to a plain chat. Now I'm going to clear this chart and we are going to mark off the structure so you understand how I view structure. Now, many people or different people have different ways of viewing structure, of identifying structure. If you ask a lot of traders what trend this market is in, a lot of traders will say that this market is in an uptrend. Okay, the market is in an uptrend, but they will all have different reasons for why they feel like the market is in an uptrend. What do I mean? Now, in my last videos when I spoke about indicators, I said I could have an indicator on the chart for visual purposes or for, but I would never take a decision based off an indicator alone. It means if I have the 50 MA here and the 50 MA is telling me that the market is in an uptrend, even if I'm seeing that the 50 MA is not telling that the market is in an uptrend, if I have a bias of the market being in an uptrend and 50 MA is telling that the market is in a downtrend, I will still take positions on the market being in an uptrend. Why? Because I know how to mark out structure. This is not astrophysics. This is not difficult. So let's do it here. Let us go straight into this. And let's go from this region. Some traders will tell you, oh, the market, this is a low. It came up here, made a high, made a higher low, made a higher high. This is a potential higher low, and that is why they feel like the market is in an uptrend. I do not have anything against this, but my only question is, or the only confusion I have is, what of when the market made this pullback and it started going up here, or it did the same thing here? Would you say, oh, we're trying to wait for the market to put in a higher low and push up and make a higher high before taking decisions? I don't know whether you're understanding what I'm saying. Now, I'll show you how I personally approach structure and trend. Let me clear this up. Now, we're currently on the daily time frame, yeah? So, we're starting from this low. Let me take my part 2. This, any candle that has, any pullback that has more than 2 opposite candles, I count as a valid pullback. Some people will not count this right here as a pullback or a retracement because it's too shallow. This right here, they won't count it because it's too shallow. Let me pick it for another one. They won't count this one too. It's too shallow. They wait for big pullbacks like this for them to say, oh, the market has pulled back and now the market is trying to push up. That's not how I do it. That's not how I look at structure or market structure, to be precise. If we're only waiting for that, then a lot of opportunities are going to be missed. Like I said before, any pullback that has more than 1 opposite candle, I count as a valid pullback. Now, let's do this live here. So from here now, this is a low. Why do I say this is an uptrend? The low, it pushed up, it made a high here, pulled back. Why do I count this low? Look at these candles here, 1, 2, higher low, pushed up, closed above this candle, higher high, 2 candles, higher low, pushed up, higher high, two candles, higher low. This is one candle, so I don't count this one. All the way to this point, higher high. Okay. Now, mind you, this is on a daily time frame. You can go through the same process on the weekly time frame, on the daily, on the 4 hour, on the 1 hour. Just make sure you understand the concept. Okay. Now, in terms of structure, the market was not supposed to take out this low, because this was the last higher low that the market made before pushing up to this higher high. So in my brain, I'm still thinking uptrend all throughout this retracement. But as soon as the market closed below this low, I know that the trend is in jeopardy. Fortunately for us, the market came and continued pushing back to the upside. From low to high again. High, higher low, higher high. It came, it took out this low again. Lower low. But the market came and took out this high, putting us back in uptrend. Higher high. Pulled back. But watch what the market did here. It came from high to low. It did a lower high, a lower low. So structurally, let me clear this whole part. In this region here, the market has flipped from bullish to bearish. Why? This is high, low. See these two candles, 1, 2, lower high, lower low. But guess what? The market came and closed back above this last highest high. So now this is now a higher high compared to this previous high. Let me clean so you see it properly. This is the maximum height that this candle came, and this candle came and closed above. This is a higher high, potential higher low. If this market comes and breaks and closes above this candle, it should make a higher high. I'm pausing. I do not want this to go over your heads. Let me take let me look for another example where I can demonstrate this or illustrate this. This is very important. Before we start talking about strategy, before we start talking about longs, shorts, or before we start going into this, structure is the single most important thing that I can beat my chest and say, oh, you should really spend time on how to identify structure accurately. Now, this is a beautiful point to start from. This market was in a downtrend from this point. High, low, lower high, lower low, lower high, lower low. But see what happens here. It broke above here. Higher high. This trend is in trouble. Now, see what happened next. The market flipped to the bullish side. Higher low. I think this candle closed above. I think so. But if it did not, higher high, higher low. No true candle pullback here. So up onto this point. Higher high, potential higher low. Potential higher low. Potential higher low. For this, why I call this a potential higher low? A higher low is only confirmed if the market pushes up and breaks the high. This is a low, a higher high, a low, a high, a higher low. When I can confirm this as a higher low, why can I confirm this as a higher low? I can't confirm it until this market pushes up and closes above this high that it created here. So it pushes up and closes here, higher high, higher low. It pushed up and closed here, higher high. Look at this candle. This pullback came and retested the lows of this previous candle, of this previous low, but didn't close below it. Higher low, pushed up, higher high, higher low, lower high, But did it come and close below this candle here? Let's see. It did. Lower low. So for me, in my books, or the way I look at structure, the way I look at trends, I'm already, once this happens, this red candle here is shallow, but it did close below. I'm looking at this trend as being in trouble. So I would not be surprised if something like this happens and it pushes up a bit, forms a lower high, comes and changes the trend like this. Lower low, lower high, lower low, just like it did here. See, once it broke out of this high here, it tested higher low, higher high, higher low, higher high, higher low, higher high. But you need to understand, it's not all the time that this happens that the market is going to push in the opposite direction, but it is a definite indication of trouble in paradise when the market comes and breaks structure, because all this is structure. When the market is moving this way, pushing up, even though it is making a retracement, as long as it's not taking out the previous high, it is moving according to structure. Structure is guiding the move. But once the market start to take out highs, now there's a problem. There's a problem because structurally, if the market is in a downtrend, it's not meant to take out a previous high. It's meant to come and make a lower high, lower low, lower high, lower low. So once this happens, you should be on alert. I'm not saying, oh, flip your bias immediately. I'm saying you should be on alert. Okay? So this market came here, put in a lower low, but see what happens. A higher high, higher low, lower high, lower low. But when the market came back to this region, it broke back above this high. So it continued in its uptrend. Low high, higher low, higher high, equal low, higher high, higher low, higher high, higher low, lower high. Now, at this point of this lower high, this is not the low I'm paying attention to. The low I'm paying attention to is this previous low, because this was the low that caused the break of this high. Okay, so when the market came and took out this low, I'm not even going to lie, if I were to be trading this, and I'm sure I did take a trade, I would be looking for short positions here, because the market even gave us some form of double top in this region. I'm looking to go short. Why? The structure has been broken. The uptrending structure has been taken out, and I would not be surprised if the market comes from here and pushes all the way to the downside, because the structure has been violated. Okay, trading is about probabilities. It's not about having perfection. Oh, this has happened, so this must happen. No, it's about probabilities. If the structure has been taken out, there's a high probability that if the market comes back and retests this whole level, the market will drop back to the previous low. A high probability. Sometimes with probability, it doesn't play out in the favor of the higher end, and that's what happened here. It made a double top here. Probably would have had an entry somewhere here. Stops above. It pushed down a bit to give you put you in profit, and boom, back up. Now showing you that it wants to continue in an uptrend. Always listen to the market. Because I've had this saying, we react to the market and we do not predict it. We react. So now the market has come from here, made a low, high, higher low. Just follow the market. It has taken you out, no problem. Higher high, it's now pushing in an uptrend. Higher highs and higher lows, and higher low, higher high, higher low, higher high. It came here, made it a lower low here, fine and good. But see what happens. It kept putting back in an uptrend. Higher high, higher low, higher high, higher low. In all this region, this was the low. That we were not expecting this market to take out. This was the low. If you look here, there are no real two candle pullbacks. Let me see. Even if you count this doji, We can't even count this doji because this is from a low to high, higher low, higher high. So you can't even count this doji. So this was the low that we were expecting. The market never even got there. So higher low, higher high, higher low. Now the market is looking to come and put in a potential higher high. I'm currently in a trade on this pair already based off this um, idea that I'm teaching you guys in this video, based off this idea of structure that I'm teaching you guys here. I'm currently in a long position on this. So if you're able to understand the concept of structure, you are going to be able to take advantage of the market's moves. Now we have only been doing this on the daily. Let's go over to the weekly time frame. Let's go over to the weekly time frame because the market is the market repeats its patterns, it repeats its move. All you have to do is pay attention. Okay, now let's go from this point over here. High, low. Wait, let me do this properly. High, low. This is a two candle pullback. 1, 2. So lower high, lower low. The market came and broke above these candles here. Higher high. Could have found the position here because the market has broken structure. Higher low, higher high. The market came and broke below this low again. Potential for a downtrend. Now see what happened. The market flushed all the way to the downside. From high to low, lower high, lower low. I wouldn't count this as a two candle pullback, but because this is on a weekly time frame, let's just stick to our rules. Lower low. The market came now, pushed up and broke above this previous lower high. Higher high, which when the market is in a downtrend is not supposed to happen. If there's nothing else you take away from this video, just remember that when the market is in a downtrend, the market is not meant to break highs. It's meant to keep breaking lows. And when the market is in an uptrend, the market is not meant to break lows. It's meant to keep breaking highs and keep going in the direction of the uptrend. That is the concept of structure. Structure. If the market is moving structurally, it should just keep breaking highs and it will not take out lows. So when you find out that the market is taking out lows, you know that the trend of the market is in trouble. And let's continue. Low, high, higher low, higher high. I picked these points here because this candle here never took out the high of the previous high. Higher high, higher low, higher high. The market came and took out this low. The trend is in trouble. Lower low. Market came up, lower high. But instead of the market to come up and put in a lower low, guess what it did? It made a higher low again, push up, made a higher high, push down, higher, potential higher low, and the market is coming up to make a potential higher high on the weekly time frame. I hope the more you do this, what our advice is on your own, before you start thinking about strategies and all these things, find this tool. This is a part 2. Just come to your tools here. This is a part 2 and take the part 2. Open any chart. You can do this on any currency pair, crypto, stock. When you're trying to identify trends, some people would ask, how can I know that the market is in an uptrend? If I see it going up, that it means it's in an uptrend, right? Everything to me, if you understand that the market is going up, is in an uptrend, maybe that's the way you understand it, and I hope it works for you. But for me, everything is structure. Everything is structure. The market that I'm trading has to obey the rules of structure. If it doesn't, then I'm not trading it, or I'm waiting for it to break back into the trend that it's meant to go in. Everything is structure. So I advise you, when you come on your chart, you open an empty chart. I don't care if it's cryptocurrency, it's stock, whatever it is. Open an empty chart. Let me go to another pair. XAU USD. Let's do gold. And let me go to a chart that I haven't marked, a clean chart. So you can do the same thing. Let's go to the daily time frame. Oh, since we've done the daily and the weekly, let's go to the 4 hour and mark out structure. Because like I said, you can mark out structure on any time frame. Okay. Let's mark out structure on the 4 hour. Okay. From this region over here. Okay. Let's start from here, since these were low, high, higher low, higher high, higher low, higher high. Now, why did I not pick this as the higher high? Because the pullback was not up to 2. It was just one big red candle. I'm not interested in that. I want to see a real pullback of at least 2 candles. Remember that. Higher low. Higher high. Higher low. Higher high. Higher low. Potential higher high. So this market is in a clear what? Uptrend. Now look at everything I did here. I'm trying so hard to, I don't know how I wish I can just remove it from my brain and pour it inside people's brain, because I see many people making many mistakes or asking questions on certain things, and I just know that little concepts like this, they have not been able to get them, so they are still struggling with little things. Let me just take this ray tool and put at every point, at every higher low point. You say from low to high to higher low. Why do I call this a higher high, a higher low? Because the market came and broke out of this high. So I mark here higher low. From this point, this market, what I mean is I'm not expecting this market to come and take out this low. The market pushed up again, make a higher high, higher low. Why? Because it pushed up and broke above this high. So this is a higher high. Which low am I expecting the market not to take out? This low here, higher low. The market came up, higher high, higher low, pushed up again, higher high. What is the low I'm expecting the market not to take out? This low here, higher low. Higher high, higher low. Which low am I higher high? Which low am I expecting the market not to take out? This one here, higher low. So provided that this market has not taken out this low, has not body closed below this previous higher low, the market is still in an uptrend. So I feel like this is the basics of what you should know about structure. Now you can take this structure concepts and carry them out to your lower time frames. It works on all time frames, on the 1 hour, 15 minutes, 5 minutes. You just need to know how to apply them. Now in the next part of this video, I'm going to show you how I bring all these things together to make a strategy out of all of this. Okay, so I'll catch you guys in the next part. We'll go over the strategies and how to make a strategy out of this. So I'll catch you guys soon. Cheers.